for joining our first of what we hope is many videos in where we're going to be discussing some of the real estate happenings in Central Ohio with you. We've got some of our agents on and Rob Berry with Union Home Mortgage. We'll go around, introduce everybody. We'll start up here at the top with Mike.
Hi, everybody. My name's Mike Hopper. I'm married. I have 2 daughters. I'm 33, and I specialize in helping clients purchase real estate here in Central Ohio.
Jamie?
Hi, everybody. Yep, I'm Jamie Barlow. Just like Mike, I'm an exclusive buyer's agent here at Sell for 1%. And similar to everyone else here, I've had the great pleasure of working with Rob. Always smooth sailing when Rob has his hands on the financing aspect for his clients. So I'm excited for the informative discussion we'll have.
Go down to Dave, the old man.
Howdy, folks. I'm Dave Barlow. I've been doing real estate about 22 years. We've been involved in over 3,500 plus home sales on both the buy and sell side. We hope that the seminar today will give you a little bit of insight of how you can purchase a home even in this coronavirus crisis that we have.
And then Rob.
My name is Rob Berry. I'm with Union Home Mortgage. I've been in the business for going on 28 years in September, and be glad to help you answer any of your questions.
All right, cool. And I'm Jason. I've been doing real estate for 15 years in Columbus. I'm a lot like the old man, just much better looking and a lot more hair. Our first question is for Rob. How has coronavirus impacted your business? What's it done to the mortgage world?
It's been crazy. Not only the job losses and the unemployment, which really impact trying to get somebody qualified, the tax stimulus bill that came out also threw a big wrinkle into the market as well.
How did the stimulus bill throw a wrinkle? I would think that would help.
Well, you would think. So you got to think of it this way. The tax stimulus bill came out to and said to all the borrowers, if you are having an impact directly or indirectly with the coronavirus, then you can have your mortgage payment deferred or forbearance on your mortgage payment. And this is really specific more to the FHA buyer. And so an FHA buyer can then call their servicing lender and say, hey, I've been impacted. And we can't even ask them really any questions. We have to just take their word for it. And we can have to defer their payment. And it could be up to 12 months. But the catch is, even though we're the servicing lenders, all these FHA loans are securitized and sold as a bond. And the mortgage payment still has to be made to the bondholder. Well, if the borrower is not making the payment, who has to make the payment? Well, the servicing lender does. So not only do we have to pay the interest, the principal, we still have to pay the property taxes. We have to
right.
And you think of that, thousands of FHA loans each servicer has, that's a lot of money. And that really impacts, our bottom line. So what kind of happened, and you might have seen some press on this, is that interest rates have they went down, but one of the things that's happened is the credit score guidelines have went up. Servicing lenders now are saying, hey, we can't make loans to buyers that have either bad credit or past credit issues. We want buyers that have good credit, so we don't have to worry about possibly having a forbearance or something like that. So the credit tightening has been very, very tightened up in the last 2-3 weeks. Hopefully I explained that well.
Right, and I actually had a buyer that got caught up in all this that I switched over to you, and she had, her credit score just a little too low for what has happened with the stimulus. And where you guys have seen the credit score have to be around for your lending guidelines?
Well, for our company, we went from 600 to 640. And I have seen, I think Chase just came out and I said that I think they went to 700. And I've had a couple of my other lending partners that I deal with, they're around 680. But Union Home Mortgage, we're at 640.
What have you seen it done with investors? People that are buying duplexes or 4 units. Any impact?
I haven't seen any impact on them much at all. We're still doing conventional home style product with a 15% down payment. If you go with a 15% down payment, of course, you're going to need PMI, but I haven't really seen any issues with that at this time.
Interesting. Okay.
And if I may, Rob, just to touch on the credit score stuff with FHA, can you dive a little bit into why you guys chose your 640 score and why Chase might have chose 700 and why FHA doesn't control that, but you guys do?
Yeah, that's getting into a little bit technical more than what I can come up with, but I can at least just tell you that I know Chase not only originates loans, but they also do what they call correspondent lending, where they go out to the market to mortgage brokers and do business. So they've got a much bigger exposure.
Okay.
So they deal with it's almost like a tree. They're the trunk, and then you got all these limbs. So they have a lot of exposure out there, and they're just trying to shrink it up.
Gotcha.
Okay. We don't have as much exposure, so we're not. We don't have correspondent lending going crazy. We just pretty much have the trunk, so we don't have as much exposure.
Okay. I kind of wanted to dovetail because I know you had mentioned it briefly in the beginning in terms of interest rates, but we did notice a few weeks ago that they jumped pretty high, close to 4%, but now we're back down. I mean, do you see them staying steady for the next couple months, or should we expect it to stay pretty volatile?
Well, I tell you, before this coronavirus, I could get a good indication of where rates were going by just looking at the treasury yields, looking at unemployment figures, and looking at just the overall economy, not only here in the United States, but in other areas. In today's world, the game's completely been changed. And I've literally seen interest rates go from 2.75 on a 30-year to 4.25 in 2 or 3 business days.
Wow.
And it's just nuts. And it's all based on who's buying mortgage-backed securities and who's not. Before the Federal Reserve came in and started buying mortgage-backed securities, there was no demand for it. Even though you've seen the 10-year Treasury bill, which is a good bellwether to let you know where interest rates are going, that plummeted. So you would think mortgage rates would plummet with it. And it did for a day, 2 days. And then nobody wanted mortgage-backed securities. It just dried up. So even though the 10-year went down, nobody bought the mortgage-backed securities, so interest rates went up. You had to increase the yield to get people to buy the security. Until the Federal Reserve stepped in, and they came in and they bailed us out, but they only bailed us up to a certain point. And what happened.
And so getting back to buyers that are currently in the market, we got kind of a background here is what's going on with interest rates jumping up and then back down. Just real quick, where today is April 20th. Where's your interest rate right today, Rob?
Again, I mean, credit scores are a real driving factor on mortgage rates. But before I got on this, I was just pricing a loan, a 30-year for maybe a $150,000 loan amount. You're looking at about 3% on an FHA loan.
Oh, wow.
Conventional, between 3 and 3.25.
Okay, and it's been down in that 3.25 for the last couple of weeks or so.
I would say 10 days to 2 weeks, Dave.
Okay, all right, and so probably safe to say over the next 2, 3, 4 weeks that we'll probably stay in that range, barring anything crazy coming down the pipe as well.
Yeah, the Federal Reserve's been pretty positive on continuing to buy the mortgage-backed securities. And as long as they keep saying that and keep saying the right words, you'll see interest rates stay low.
And so if a buyer comes into the market today and they want to lock their rate in once they write a contract, then you guys will honor that for how long?
Well, we definitely want to put a rate lock on it to cover the contract period, but we're closing conventional loans within 30 to 35 days, FHA right around 45 days.
Okay. And so the only wild card is if, and this is kind of the weird thing for me was I had a buyer on one of our properties that we represented the seller on, and basically about 2 days before closing, the credit score went from 620 to 680 with this particular mortgage broker, who's basically, as you talked about, they're using Carrington as the mortgage buyer. And Carrington said, nope, we need to have 680. And so we had to extend closing 2 weeks because this particular buyer was able to get to the 680, but had to reduce a credit card. And so by reducing the credit card and doing a rapid rescore, she's able to get above the 680 and not have to redo the loan, and we're able to close. But I thought that was kind of weird when I first heard it, simply because it's like, well, how can you change the game and you're right there at the end of the game?
Right.
And, the lender can pretty much, it's the old saying, he who has the gold gets to set the rules.
Sure.
And that's basically what we saw was we need the credit scores to be 680. You guys are 640. Chase is at 700. There's nothing standard. But barring anything like that happening, what are you guys doing in order to continue to move buyers that you have in the pipeline forward? And what should buyers be thinking about?
Well, early in the game, when you refer a client over to me, the best thing I always tell a client is, number one, don't go open up new accounts, make your payments on time, and
Don't buy a car.
Don't go buy a car, an RV, or timeshare. Timeshare was last week.
Oh boy.
Exactly. And based on that, I'll pull the credit report and I'll see where they are. And I'm always trying to improve their credit regardless, even if I've got them locked in and I'm able to process their loan at 650, because the reason I want to improve their pricing is because if I can improve, their credit score, I can improve their pricing through the game, through the contract. So if I've got you locked in at 650 credit score at a 3.5% interest rate, if I can move your credit score to 700, I might be able to drop the rate 0.25%. So we just school the borrower and tell them to use common sense, don't open new accounts, pay down their balances, and really it's about all you can do, and just trust that the borrower's listening to you.
And you're able to relock a buyer's rate throughout the process.
Yeah. So what we do is, today's April 20th. So I will lock you in on today's pricing on a 650 credit score. 2 weeks prior to closing, you've done A, B, and C, and now your score 700. I can go back to April 20's pricing and give you what your pricing would have been on this date at a 700 credit score. And we can do that for free, and there's no cost to do that.
Awesome.
It's very good.
Yeah, that's very important. I don't know, a year or two ago, me and Mike were working a deal, and that particular buyer had a friend who did mortgages out of Indianapolis, and that's always the kick of death when
I got a friend.
Yeah, friend.
A friend.
And, the friend didn't lock the rate, and the reason why I found out was it actually cost lenders money to lock rate, and so they wanted to go through the appraisal first before the lender put their own money into the deal. And what ended up happening was rates jumped. And so the buyer had already paid for a home inspection. They had already given a 30-day notice to their landlord.
Wow.
They're planning on moving into this home, and the appraiser, they paid for it. So, I mean, you're talking, $1,000, $1,500 plus deposit. And then the interest rate comes, and they felt stuck, and we closed the deal, and they paid the higher rate. But I mean, that's very important to buyers that are listening to this, to lock your rate when you go into contract.
Right.
To protect yourself.
And in today's world, too, not to cut you off, Jason, when we disclose a loan, there's a form. It's pretty evident. It says right there, is your rate locked or not locked? And, as a lender, we're sending this out. But, if you're not dealing with us, you might want to make sure your buyer knows, hey, did you look at that form to make sure you were locked or not? That would be something I would definitely have a discussion with your buyer.
Yeah.
So would that be on the original disclosure?
So once you go in contract, that's when the main loan disclosures are disclosed to the buyer, and it's called the loan estimate, and it says right on there, floating or locking, and it'll be checked either way. And it should tell you how many days you're locked for as well.
Okay.
Nice. So that's available to the borrowers. Nice.
Right.
That's cool. So let me ask you this question. With all this coronavirus and social distancing and being, at home and stuff. Well, let me ask you real quick, for buyers who were in the market, lost their job, or were furloughed. Let me ask you this question. When they go back to work, how long do they have to be back at work in order for them to get their loan moving again?
With our company, other companies are different. We took the stance as if we can phone verify that they are back to work and they are not work. Let me say it this way. If we can verify that they're now working, not working 10 days from now, but working, we're okay to proceed with the loan closing.
And does it have to be with the same company they were working for, or if I just have a job at McDonald's now?
No, that's a different story. So if they change employment, then we want them working. We want to verify a pay stub. We want to verify a verification of employment, make sure it's not a temporary position. So there's some things that we have to check when we switch employers. But if you're going back to the same employer, as long as you are back to work, we're good to go.
And so they can pick right back up on day one, they're back to work.
Yeah, we do it's called a phone verification. We call and say, is he in the same position, same hours of work, and same earnings income? And if they say yes to all three of those, then we're back to normal.
Cool.
Good. Well, that's good news for a lot of people. Hopefully, here in Ohio, Governor DeWine's talking about, starting to unlock some of this stuff as of May 1st. So here in another 10 days, we ought to be hopefully moving back forward again.
Yeah, hope so.
That's cool. So let me ask you this question. As a mortgage company in today's world with technology, just like what we're doing today, 22 years ago when I got into this business, if you had a fax machine, that was high tech. And so here we are doing video conferencing with people around the city. What other technology has Union Home been able to put into place to help potential buyers who want to apply for a loan and to keep a safe distance, so to speak?
Well, I mean, right now you can actually apply online. You can go to our website. You can go to I have one that says applywithrobberry.com. They can go and apply. Documentation wise, everything can be scanned, taken a picture with your smartphone and sent to me, and I can upload it directly. Some customers are not very technical savvy. So I've actually went to a parking lot and pulled up beside them with my mask on and my gloves on and passed it through the car windows. So there's always ways to get around it and smart ways. You just got to use common sense.
Service with a mask.
Absolutely.
I think we're probably going to see more and more of that, even as we kind of get things back into quote unquote normalcy. But I think we'll probably just see more, as we show houses, people showing up with masks, gloves, booties, following all the social distancing rules that are out there. So
I might get out of the business if everybody starts dressing up in a hazmat suit. Something's telling me we might want to rethink everything.
Right.
People still going to have to buy and sell houses, so hopefully they'll be smart about it.
Right.
And we'll be smart about it. So I guess in order to get someone pre-approved, Rob, somebody that either has a job or has been furloughed, getting ready to go back to work, what is the process? I mean, one of the things we always talk about with our buyers, and even as I represent sellers, in this crazy world that we have, we're still seeing multiple bids. I just had a property that we had about 2 weeks ago. We had 30 some odd showings on a Friday, Saturday, Sunday, and we had 11 offers. And
Wow.
One of the very first things that I look at is, are you pre-approved? And if you're pre-approved, who is the lender? And so I would just simply tell you, based on my experience, there are certain pre-approval letters that I love to see from good companies like Union Home, and some others that are out there. And I can also tell you that there are some lenders out there that I don't want to see a pre-approval from, because my experience has told me that these companies are tough to work with, or they've not done their due diligence the way that they should have. And
Right.
so that plays into what I then recommend to my clients. You should consider this one strong, this one not so strong, or even go back to the buyer agent and say, hey, your guy's a player, but your lender's not very good. So would you consider moving lenders? So with all that said, with Union Home, let's be a little more specific about if somebody wants to apply for a loan with Rob Berry, how can they go about that?
Well, a couple ways. Number one is the website that I mentioned, www.applywithrobberry.com, or call me on my cell phone. I usually take phone calls up till 10 p.m. at night, and that's Monday through Sunday, so 7 days a week. But I do something a little bit different. So not only do I do a loan application on the phone or by the computer, what have you, but I also try to get the buyer to give me the documents, the pay stub, the W-2s, because you get so much more when you get paperwork. You can interview a buyer and they can give you all the information on the phone, but then when you get their pay stubs, their W-2s, then you find out something different, or could find out something different. So I just don't do a phone application and an online application. I go to the next stage. That way, when I do issue that pre-approval letter, I know there's some bite to it and it's been looked at. And I think that's important.
Yeah, and that's kind of.
Go ahead, Jason.
I was just going to say that's kind of, the people listening in and aren't in the business. That's kind of what the old man's point was earlier about why a Union Home pre-approval has more weight to it than one from a company that is on the blacklist. And so it's nice to hear that you do go to the next step and verify and start to collect pay stubs and the things that are needed to make sure that the buyers are good, because that means for our clients that use you that when we make an offer, we win the bid. And that, when the other listing agent is calling his seller and he's saying, hey, you got 3 offers and 2 are with lenders we don't like, but one's with Rob at Union Home, and we know when Rob's in the pre-approval, it means something. I mean, and that's the difference. And so I just wanted to point that out.
Yep. And I just want to give you a real quick example. I interviewed somebody for a loan application, and they worked at Honda and took the loan application. Everything looked great, but when I got the paperwork in, the pay stubs were from a temporary agency, because Honda sometimes uses temporary agencies for employers for 6 months, a year, and sometimes you don't even get rehired after that time frame's up. So of course I couldn't do the loan because I needed that person to be on a temporary agency for 2 years. That's the guideline. So doing an interview with somebody's one thing, but following up with paperwork's the other.
Yep. Very good.
All right, guys. Anybody else have anything?
I think it went great.
Rob, thank you for your time.
Thanks, Rob.
Anyone who's anyone out there watching this, looking to think about buying a house, make sure you look up Rob. It's Rob Berry, Barry, applywithrobberry.com. Check out Rob, and thanks for joining.
All right, appreciate it. Thank you, guys.
Thank you.
Catch you guys later.